So be sure and hit that like button when you join in on the live stream. By hitting that like button, the YouTube algorithm will pick up the video, spread it around for more people to join in. And these videos are so much more fun when we have interesting comments taking place to try and figure out what it is that is truly happening out here within the economy. Now, today we're going to talk about the disappointed home buyers that are out there. It's pretty interesting to think about some of the narrative that was being communicated out there to the mainstream media prior to the Federal Reserve cutting rates. Now, there was a lot of people anticipating that the lowering of the Fed funds rate would then bring a surge of home buyers into the market to try and take advantage of some of those lower rates. But what actually took place was the mortgage rates went up, making it more difficult for the new home buyers to come to the market to make those purchases. In fact, I even have a friend of mine who is putting her house up for sale right now, and the real estate agent even said to her, when the Fed cuts rates, there's going to be more home buyers coming to the market to take advantage of those lower rates. But yet we see the exact opposite happening, and the home buyers are getting very frustrated with the situation, considering that the mortgage rates didn't come down but actually went up. It's now more of a burden to try and buy a house today than it was just a few weeks ago. So just trying to get a better understanding of what is happening here within the market, because when you think about it, there is a lot of homes out there, and there's existing homes and then there's new homes, like new constructed homes nobody's lived in yet. These ones are coming up for sale along with the existing homes. But the people who have existing homes, they're not so likely to set those things off for sale if they don't have another place to go to. So the existing homes have actually come off the market in a lot of ways because the buyers or the people who have those homes, who are in those homes, don't want to give it up. They don't want to give up the low interest rate, they don't want to give up the price they paid for it, or they may not even be able to afford to move because of the way things have changed so much. Like even me personally, I bought a house 3 years ago and I could not afford the house today. Like even if I was to pay the same price for it, I would not be able to afford the interest rates that are now attached to these mortgages. Considering what's happened over the last couple of years, my house has actually gone up in value. Well, gone up in value, that's kind of relative. But the price tag of it, the estimated value of it, has gone up, and I would not be able to even find a comparable house to live in today. Even if the interest rates were the same, I still wouldn't be able to afford to live in it. So that's kind of everything in a nutshell. But to really kind of take this into consideration of what's happening out here, one of the things that I brought up was new one-family houses sold. Now, this is coming from the Federal Reserve. And what I have seen here is that there is more new one-family houses sold today in this economy right now than there was prior to the pandemic. And let me show you the chart here. I'm going to take it back to a 5-year chart, and you're going to kind of see it. It doesn't look right because of the 5-year, but then I'm going to expand it back just a little bit further. So you can see this is the chart right here. Right? And so ultimately, if you look right here, is almost the same place we were prior to the pandemic. Right? Can you guys see that? It's a little glare kind of going on. But let me take it back to the 10-year chart because this is really telling. All right, so this is the 10-year chart. See, all the way prior to the pandemic, right? Leading all the way up to the pandemic, which is this gray line, and then the surge in home sales that fell off dramatically. Everybody was freaking out about the crashing economy, crashing houses, right in here. This was the new home sales falling. And then it started ticking back up again. And now here we are sitting in a position that is higher prior to the pandemic. Right? See, this is probably not what it is that people would have anticipated seeing within the economy right now. You think, okay, well, there's less home sales taking place, which is true, right? Less home sales that are taking place. But when it comes to the new home sales, the newly constructed homes, there's more being sold now than there was prior to the pandemic. Right? It's not just that, it's also stages of completion, right? Here's one, another chart. It goes all the way back to 1965, but this is new houses sold by stage of construction. These are completed, right? So you can see right here, This is now higher than just about any time, right? Right over here where my finger is, you can see it. And this is a chart that goes all the way back to the 60s. Again, this is new home sales sold by stage of construction that is completed. Under construction, right? New houses sold by stage. This is under construction, so these aren't even completed. Again, take a look. This little thin gray line that you see over here, you can hardly see it in there. It's like right just before the peak, right? It's right over in here. But you can see prior to the pandemic, there's now new home sales, right, under construction that are more sold now than there was prior to the pandemic. See, it's the new home sales that are now the hot commodity within the market. Here's another one. Monthly supply. Well, the monthly supply of new homes has definitely increased. Now, this is where everybody's freaking out right here, right? Because this monthly supply is now much higher than it was prior to the pandemic. But still, it has come down since the peak. So when I think about what it is that's taking place out there, it really comes down to these interest rates that are keeping people locked in their home. This is one of the reasons why you're not seeing a lot of home sales taking place out there within the existing market. It's because people are locked in. People don't want to give up those lower rates. But the new home sales, that's a different story. This is one that where people are buying. People are buying into that new constructed housing market. And I know that a lot of people are going to be freaking out about this, saying, yes, the institutional and buyers. Well, that's maybe very well true, but it doesn't take away from the fact that it's happening. That's the important part to understand. And that if there's newly constructed homes, those are the ones in which that people are actually buying. Whether it's institutional investors or just regular individuals, the existing home sales are definitely sitting, those people are sitting tight. But when it comes to new construction and considering the elevated home prices, that's the market that people are going into. And this is something that I had predicted actually quite a while ago. I said that there was going to be a slowdown in new construction, and that if you are actually completing a home, you would have something that not a lot of people have, and that's a brand new house sitting on the market, which is selling, which people are buying. Now, what else I find pretty interesting about this, let me see if this is still the case. Home purchases by all cash buyers. Let me see if there's a Fred chart on that. There is. Cash purchases sold by type. Here we go. Now this is houses sold by type of financing, cash purchases. These are the cash purchases. Again, I'm going to show this chart, right? You can see this is the great financial crisis, this big thick line right there. Then you got a smaller, thinner gray line. That's the pandemic. You see that now? All cash buyers, just about more cash buyers in going all the way back to 1990 before you would find as many cash buyers are in the market as you do today, right? There was a little time back in 2005, like the third quarter of 2005, you saw more cash buyers. Well, not even, well, yeah, I guess about, right? So back in there in 2005, where I got that little tag right there, that was the only time that there was more cash buyers than there is today. Okay? So when people think about the interest rates that are dictating what's going on in the housing market, I think differently, right? Yeah, interest rates has a lot to do with it, but it doesn't have everything to do with it, because if it did, we would see a much different story taking place within the new construction market. Yeah, interest rates being elevated has locked a lot of people into their existing homes. But the new homes that are going on out there, those things are selling. People are buying those. And the amount of cash buyers in the market right now are more prevalent than just about any time in history. This is stuff that you really have to consider when you think about what is going on within the broader economy. When you think about the separation between the rich and the poor. When you think about the new money that comes in and how the Cantillon effect is really playing out right now. A lot of times we want to blame this all on politics, which, you know, I understand there's a lot to blame on politics. But then when you look at this objectively, when you take a step back and say, okay, let's start putting all these pieces together. Let's start figuring out what it is that is, gee whiz, man, I can't talk. What is taking place out there? And when you think about interest rates being elevated and that is the key factor, well, it only plays out for those who are actually taking out a loan. It doesn't play out for those who are paying cash. Those cash buyers are willing to pay at this price. It doesn't matter what the interest rates are. You know, when you have major concerns taking place within the economy, people have a tendency to get very leery about investing their money. But when you have very few places to go, when you think about what it is that the history has told us about who it is that lives independently of the state, the property owners and the capitalists. These are the two who live independently of the state. Right now, you can see the people who are trying to separate themselves. It's these cash buyers. They're buying into the new construction market because the existing home sales are not up for offer. This is a clear evidence of how the separation takes place, how it's obviously happening. And people out there are looking and saying, no, there's a crashing housing market, man. You don't understand. This is all coming to an end. People can't afford the payments. They're going to lose their job and foreclosures are going to skyrocket. And I'm thinking, yeah, and the cash buyers are going to step in because that's exactly what they're doing right now. All right, we're 10 minutes into it. We're probably only going to do another 10 minutes here and call it quits. What do you guys have to say? Let's get some good comments and questions going here. All right, all-nighter, maybe Javelin, I'm shopping too, try Velocity Mortgage. Hey, Benny, if I had a choice, I would much rather buy an older home and remodel it. Yeah, and see, now that's the problem that's facing is like a lot of people would take that consideration, but the people who are in those older homes, they can't leave. Like I couldn't leave my house right now unless I left my area. Like I would have to completely leave my entire community and go find something someplace else, start a whole new life. Other than that, I'm stuck. I'm stuck at where I'm at. Good afternoon, UE and chat. Well, good afternoon, Larry. Gray, member for 12 months. Thank you so much for being a member of the channel. Just John. Hey, y'all. All-nighter. Welcome, Gray. Benny, howdy, hider. All right. I love how you guys are all greeting each other up in here. All right. Grant says, hello, I'm watching in Scotland. All right, man, we're live in Scotland. That's cool. Benny, wow, Simon, leveling up the PC. Yeah, it's actually a tablet here. This is pretty cool. Let me show you. See, it pops right off of there. I love this keyboard fact, you know, the way this keyboard thing works on it, so I've been using it quite a bit. All right, modernizing his unit. I love it. I bet Dishes is satisfied as well. Oh, you know she is. Hit the like button, Gray says. What is that? All-nighter hider, need glare diffusers. Yeah, I do. I wasn't expecting to think of glare. I don't figure that part out. All right, I hear Gen Z kids like living in shoeboxes now. You know, I think about it myself. It was just like, if I was very young, and considering what it is that's going on right now, I would not take the same route that I had done when I graduated high school. Like 30 years ago, well, 30 years ago, when I graduated high school, many of my friends, myself and many friends, we didn't go to school. Like we already had jobs. Like a lot of us already had part-time jobs that went full-time when we graduated high school because we were working, you know, these high school jobs, and those employers were looking forward to us graduating high school and giving us full-time positions. And a lot of us stuck in that industry. Like I have a buddy who started washing cars and for a mechanic for an auto dealer, and ended up becoming a mechanic for that company. That's the only job he's ever had his entire life, right? He only worked for that one company. And there was many of us who had that kind of thing going on. We all had apartments. Like we were living paycheck to paycheck, but we had apartments. We had cars. We paid insurance. We, you know, were living life. Today in this community, I cannot imagine that being the case. I cannot imagine a couple of kids graduating high school and being able to rent an apartment and kick off in life and go and pursue the things that like we had done when we were younger. It is very difficult in this area now. Now, I'm not saying that that isn't possible in other parts of the country, but where I'm at, not feasible anymore. You know? It's a very different time. All right. I'm watching townhomes being built right in front of me, selling fast. Yeah, the new construction market is doing quite well. I love blaming politics when it comes to my shortcomings. I hear you there, P. Nice. All right. Huck to flat. What do you think of the strong retail sales numbers this morning? I mean, I think that's probably going to be revised. I don't see the strong retail sales. Now, granted, I am in a smaller community out on the Pacific Northwest on the coast. You know, we are a very unique position out here, which is different from like a lot of the rest of the country out there. But I'm seeing a slowdown in retail sales. Like I am not seeing the same thing that is being communicated out there on the mainstream media, on the from the statistics that are coming out and the data that is being revised and projected out there. When it comes to that retail sales, I'm not seeing it. Like, I mean, I see the numbers too that they're saying has taken place, but what I see happening within my own community and within the retail space that I work myself, it is slow. It is very slow. In fact, I had just recently a carpenter who I've known to work here my entire life has come up and says, "Dude, I cannot find anything going on right now. I need some jobs to get to. If you hear of anybody who needs anything done, let me know. Like a deck built, fence built, a house framed, anything like that, let me know." And that's something that I haven't heard in quite a while. All right. Uneducated economist, are you a business owner? Well, I'm not necessarily a business owner, but I do have business. Like this channel is a business. I do run side hustles. So it's like I do have business that I do, but I'm not like a business owner. Like I don't have a product that I sell. I don't have a service that I sell. But I do, in my opinion, have a business that I work, which is the YouTube channel, my side hustles. My day job's a little different. All right. Uneducated economist. Let's say you have $10,000. Do you pay off your car or put it in the stock market personally? Javelin, that's a great question. Now, when it comes to if I have $10,000 and I have debt or I have an investment that I'm going to, depends on the debt. Like my house mortgage is a 3.125% interest rate. Pretty low. Now, if I could find an investment that was significant over that 3%, then yes, I would put it towards an investment like the stock market. Now, if it's a credit card debt or a car loan that has a very high interest, say even 6, 7, 8%, well, then you would have to find an investment that is far above that interest rate that you are paying on that loan to make it worthy. You see what I'm saying? Like if you have a 7% loan going on there that you're paying an interest on, a 7% interest on, and then you put your money towards an investment that gets 10%, well, you're only making like 3%, which is pretty low. And even right now, that's hardly going to beat inflation, considering that inflation's slightly over 2%. So really now you're down to like 0.2, 3, 4, 5%. Not a very good investment. Like in the long run, that doesn't work out. So ultimately, if you have debt, there is no better investment than to pay off your debt. Pay off the debt, because you would have to have an investment that far exceeds in returns that of what you are paying in a higher interest rate. Now, if it's a low interest rate, then you might consider it. You might consider, well, no, I won't pay off this debt early. What I'm going to do is I'm going to invest the money because I can get a return that's far exceeding the low interest rate that I am paying on this loan. See, like for me, my example is that when I have a house loan at 3.125%, I can make higher payments on that. I could pay on the principal, but it doesn't really give me any kind of benefit when I could invest that money and get a 7, 8, 9, 10% return, which is far exceeding that of the 3.25 or 3.125% interest that I am paying. So to me, paying off the mortgage rate early doesn't really make a lot of sense when I can get a much better return within the stock market or investments and other things. So another thing about that is like, if you are of the mind that there is going to be inflation, which there should be going into the future, especially 10, 15, 20 years from now, what you're going to find is that the payments on the house are going to become easier as time goes on, as inflation starts to increase our wages, increases all the prices of everything and all that other stuff. To earn the mortgage rate today as opposed to in the future will become easier in the future. Right? As your wages go up and all that, the fixed rate of payment stays the same. In the future, it will be easier to pay off that debt. So again, depending on where you're sitting with that interest rate on your debts, if it's very low, it doesn't necessarily always make sense to pay off that debt early. But if it's a higher interest rate, absolutely. That's where every dime should go, is into paying off that debt to get that knocked out. Because again, there is no better return on investment than to pay off your debts. All right. Let's cruise down here to the bottom real quick. We got 300 people watching. Thank you so much, everybody who has hit that like button. Go hit that like button. We'll get more people in here for the next, say, 10 minutes or so. GMA, are you in Astoria? Where's GMA? GMA Merkel, I want your friend's number. I got work for him. All right. Well, send me an email and I'll get you guys connected. If you're local here anyway. All right. Why so many people paying cash then? In my opinion, right, this is a clear and present sign of the separation between the rich and the poor. This is like when new money comes in, what the people do with that new money is going to dictate where it is that the economy goes. And when you have new money pouring into the system, you are going to find a separation taking place. When new money pours in, the foreign production that is out there in the world comes to the United States. We export money. When that production comes into the United States, the production of the United States diminishes. This is the case of new money coming in. Now, there is no better sign of new money or the abundance of new money in the system than the prices of rents and leases that the property owners are charging. Like a lot of times people will like, oh, it's greed, it's manipulation, it's the politicians' fault, it's all this other stuff. But yet Cantillon described this exact scenario hundreds of years ago. Hundreds of years ago. Now it looks different because of, the way things are, technology changes and transportation, cell phones, all this other stuff that Cantillon didn't have back in his day. But he described what happens when new money comes in. And when that new money comes in, it will separate the rich from the poor. And there's no better sign of that than the rents and leases. There's two people who live independently, well, three, but there's two people who live independently of the state. Property owners and capitalists. That's it. Everybody else has to work, has to suffer under the rule of somebody else out there. Whether it's a boss, whether it's the government, whether, even property owners and the capitalists have to suffer under the government, but at least they have a bit of separation away from everybody else out there. Because most people have to live paycheck to paycheck. I don't know how many people I know who earn $100,000 a year, which doesn't seem like that much money, live paycheck to paycheck, when yet the average income is less than 50% of that. Those people are the ones who live paycheck to paycheck. Everybody else lives a luxurious life. They just don't even realize it. They say, oh no, my life isn't that luxurious. I drive a modest car. I live in a okay apartment in an okay neighborhood, and I eat food, and it's not the greatest food, but I eat food and have all these utilities and stuff. That's a luxurious life. Most people don't realize it because it's so normal, but that is a luxurious life. Having all those conveniences, that's wealth. Wealth is food, conveniences, and pleasures of life. And if you have an apartment, you have a car, you have a cell phone, you have something to eat, that is the pleasurable experience. Because there's people out there in this world who don't have any of that stuff, and they work 4 times harder than you do for less than half of what you got. I meant in relationship to not paying off a mortgage. I meant in relationship to not paying off a mortgage. I love good discharge, hider, debt, or otherwise. I'm not sure, P-Nice, with the I meant relationship to not paying off a mortgage. You know, I mean, this again, like if you have a high interest rate, then I think it would, like if you had a 6% interest on your mortgage, I would pay that thing down. I would pay that down because you would have to get a return of like 12, 15% to make it worthy to invest it. Otherwise, might as well just pay off that mortgage and get it down, you know, significantly. You know, even if you don't pay, like there is no, like if you have the money and you're not sure where to go, it's never a bad idea to make a mortgage payment. Like that, like even if it's a low interest rate, it's still like you're like, man, I don't know what to do. I don't know where to invest it. It's okay to go ahead and pay off your mortgage early if you can. Like there's nothing wrong with that. But if you have other ideas out there on where this money could go, that's the strategy that I would take with it. Is that how much above my debt can I earn, above that interest rate that I am paying, to make it worthy? If it's not, then I got to pay off the debts. Like right now, I have a little bit of credit card debt left over from a medical bill, and I'm like, I put most of it towards that debt, paying that thing down. Now, do I put a little bit towards the stock market and Bitcoin? Yeah. Every single month, I'm putting just a tiny bit. Every time I get paid, I'll throw $50 at it, maybe $100 if I have it. But there is never a month in which that I let go by, in which that I don't purchase at least a little bit. You always have to pay yourself. Right? Sometimes you pay yourself a lot, sometimes you pay yourself a little. And if you have a lot of debts, then you have to pay yourself a little. But there's always, you know, something that's going towards the holdings, right? Whether it's going to Bitcoin or silver or stocks or whatever it is. What time is it? Okay, guys, I got about another 2 minutes here and then I got to go. All right, financialization of the economy allows unproductive activity to be highly rewarded in fiat. Yep, that is about the simplest, fastest explanation of it. All right, put it in the market. However, peace of mind is invaluable. All right, Michael Turner, where did the geographic nation go? All right. Andrea says, all-nighter hider, we must have missed something on the news this morning. All right. Okay, I see. Right on. Yep, that's right, P-Nice. I mean, this is just my opinion on the things that I've learned and stuff. I mean, I know when I was listening to a lot of investors trying to figure out what it is that I needed to do to get out of debt and get things going, I was like suffering in a very bad position, not only mentally but financially, all kinds of stuff. And I kept following these investors, and one of them says that it doesn't make any sense to invest if you have debt. The best investment you can do is pay off that debt, because you have to earn beyond that of what you are paying in an interest rate. And once I heard that, I was like, man, that makes so much sense. Every dime I had, $20, I would walk it down to the bank, because my bank was at the grocery store. I would walk down to the grocery store and literally put $20 on an $8,000 credit card bill that I had. I would put $20 towards it. Every time I got a little bit of money, I would go down there and pay my debt, pay my debt, pay my debt. And I did that for a very long time. And then one day it was gone. Like it was over. And I didn't have this debt to pay anymore, and I was debt free. And I tell you, man, that feeling of being debt free, like, the day before to the day after, nothing changed in my life. Like I didn't all of a sudden have, like, you know, all kinds of things in my life all of a sudden. There was no difference from the day before to the day after, but everything, the way I felt and looked at the world, and everything changed the moment that I got out of debt. People have no idea how stressful and impactful it is to have even a small amount of debt, but a significant amount of debt is incredibly deteriorating upon your mind. right? Upon your understanding of everything that's going on out there, because you constantly have this burden of I can't go and spend this money on other things. I got to pay this debt. I got to postpone my happiness to pay this debt. I got to postpone these opportunities to pay my debt, and that is very, very difficult for a lot of people to handle. All right, guys, I'm gonna call it quits. I got to go back to work because we all got the bills to pay. Yes, sir. I can't wait to pay off my student loans. Yeah. Hey, Top Dynasty, my unit is crystallized. All right. UE, your perspective is what brings us here. I'm debt-free and hoping to cash out on a house soon. Nice. All right. You guys are awesome. All right. Michael Turner, nope, I'm not. I guess you guys are talking there. Okay. One more. Simon, you have credit card debt? Yeah, because I just wanted to keep the money instead for emergency fund purposes, but I had some medical bills that came up that I decided to go ahead and put on the credit card and knock it out over a few months, as opposed to depleting my cash holdings that I had at the time. So yeah, I took on a little bit of credit card debt just because of the convenience of it, as opposed to needing to do it. Like, does that kind of make sense? So yeah, it's a short-term kind of thing going on, but yeah, I took on some credit card debt. That's how we bought the dice. Yeah. All right. I'll watch the video of you paying off your debt. Made me do the same thing. Well, thank you, Big Hill. That was a big moment for me. I mean, that was a really... Oops, what's going on here? Why is this popped up? That's weird. Huh. I guess I could change the filter stuff. That's weird. I don't know what came up here, but anyway, I'm going to call it quits, guys. Uneducated Economist, you let me know. Go hit that like button.